No one likes taxes. No one likes filing taxes even more. Personal income tax. The financial, the technical, even the legal considerations are more than we know what to do with. Which is why this month on Kopitiam Ekonomi, we're taking a look at personal income tax and what the announcements at Budget 2014 mean for you, the man on the street. But first, let's get rid of all of these papers. Ha! Previously, those individuals earning 2,500 ringgit and above every month would still have to file their taxes using their Borang BEs. According to the new policy, however, individuals in the private and public sectors, if filing taxes through their company's deduction system, no longer have to do that. Borang BEs be gone. What does that mean exactly? Well, for that, we need to speak to a tax specialist, maybe from PricewaterhouseCoopers, one of the world's leading audit firms. Take it away.
The Malaysian tax system has gone through a lot of changes and evolution to make it easier and simple for the taxpayers. So we introduced the monthly tax deduction in 94, 95. 95 it started. And it started with the taxpayers paying an estimated tax on 80% of their income. And that caused a lot of refund and overpayment and underpayment. Then 2009, it became more as pay as you earn. So the taxes were more comparable to their monthly tax deduction. But we were a country, very unique country, because we introduced self-assessment in 2004. So while one hand taxpayers were paying monthly tax deduction through their payroll deduction, they were still required to file tax return submission either through manual or electronic filing that got over the years improved tremendously. So these two existence of the two systems confuse a lot of taxpayers. So if you ask an ordinary employee, they are under the impression, I'm already paying the monthly tax deduction through my payroll deduction. So that should have taken care of my taxes. So why am I still need to file a return, especially if my employment income is the only source of income? So the Inland Revenue Board felt that to simplify this process, let's converge this monthly tax deduction with non-filing options for those who are having just simple employment income, cash-based income. So starting from 1st January 2014, the monthly tax deduction that is deducted for employees who only have employment income and cash-based, that can be treated as the final taxes.
That being said, most people are still encouraged to file their tax returns. Why? Because there are many tax reliefs that still aren't reflected in a company's tax deduction system. What is a tax relief? Well, it's simply a way to reduce your taxable income. How does it work? Back to our expert.
Relief is very unique to each country. It could be driven by the country having a specific needs. For example, when we were talking about the IT development in the country, we felt that the computer relief is appropriate, and we want to be a society of a reading culture, then we encourage book relief. A relief is basically, it reduces the taxable income of a person.
Now there's plenty of stuff you can claim as tax relief. Books. Whoa, lots of them. 1,000 ringgit worth of books. Okay, fine, yeah, that includes magazines as well. A laptop, for example, you can claim up to 3,000 ringgit, but once every 3 years, you know, it's not like you upgrade your laptop every year. Broadband connection, you just have to show them your bill and you can claim up to 500 ringgit every year. Sporting equipment, haha, yes, it's a sport.
No, it's not.
Fine. And a full medical checkup up to 500 ringgit a year. Also, there are 2 new personal income tax bands from 100,001 to 250,000 ringgit and 250,001 to 400,000 ringgit. Now, what does all of this mean for you? Household incomes below 4,000 ringgit, 150,000, 200,000, 400,000. It's all very confusing, except we have our friend from PwC to show us the money.
The 2014 budget focused largely on the fiscal deficit of the country and the various macroeconomic issues that we had. And one of the key measures introduced was GST. Starting from 1st January 2015, there's a tax rate reduction by 1% in the personal tax rates, which is a natural expectation. Any country that introduces GST has historically reduced the personal tax rate, and I think we could look forward for such positive reduction even the years to come. The other issue that the country was facing was the middle income trap. For example, anyone who crosses the taxable income in excess of 100,000, then they jump automatically to 26% of the tax rate. So every dollar that person earns is 26%, which is compared to a person who could be earning 4 or 5 million. So it's like the middle income people get trapped into that high income tax rate very fast. So one of the measures or sweetener the government has given is the reduction of the tax rate and re-looking at the band, so that a person who is earning around 100,000 or 120,000 do not straight away go into the 26%. So gradually that they reduce, and so the impact is much lesser on them.
Tax systems aren't perfect, which is why the implementation and collection of taxes is something that is constantly evolving. The coming of the GST and the evolution of our personal income taxes are a sign of the constant drive towards developing a more efficient and effective tax system for the country.